Hey, welcome back everyone. And if this is your first time visiting the channel, you're going to find a lot of videos about home finance, saving money at home, a lot of mortgage advice here, home buying and selling, real estate, general real estate information. So if you are thinking about buying a house or already own one, you're going to probably find a lot of videos here that will help you. And I appreciate it if you hit that subscribe button. Okay, so this video is about how to qualify for a more expensive home. And many potential home buyers just kind of jump right into the process and they're not really prepared or don't speak to a lender months in advance to kind of prepare themselves to set themselves up to be able to afford the house that they really want. Or they have an imperfect understanding as to how the different uh, purchase factors or your financial components actually impact your purchase price. So I'm going to take you through a little bit of that, and I think it'll be eye-opening to understand how all these little changes in your in what you're trying to do will actually impact your buying power. So I've got a bit of a cheat sheet here. I'm going to have to look down at it every once in a while to remember some of these numbers that I'm going to describe to you. So the first thing is I'm starting with a base interest rate of 3% just because when I'm filming this, that's about the going rate right now for a conventional loan. So understanding that we're looking at a base rate of 3% as a starting point. Now, of course, one of the main factors that impacts your buying power is the interest rate, right? And so the higher the rate, the less you can afford. The lower the rate, the more you can afford. So so hopefully this will put this into perspective for you. For every percentage point that you pay on interest higher, that's about a $40,000 reduction in the amount of home you can buy. Okay, so if you're at the maximum debt to income ratio to get approved for a mortgage, and I have other videos that will talk about DTI or debt to income ratio so you can fully understand that if you don't already. So let's say you're at the maximum and the lender's telling you, no, this is the most you can afford, okay? If you were to reduce your interest rate somehow by 1%, then you'll be able to afford roughly another $40,000 in home. That's just rough math based on what the buying power changes from one rate to the next. Okay, so that's just a rough estimate. So in another video, I talked about points and how to use points to buy your rate down. So that would be a perfect example of how you might have, or you might be able to get the seller to contribute towards paying points to buying the rate down. And then if that happens, if you can somehow buy it down a full point, which is not easy to do, then you'll be able to afford a $40,000 more expensive home. So hopefully that makes sense to you. Next thing is your income. So it's obvious that the more money you make, the more you can afford. So for every $1,000 per year in income you make, you'll be able to afford an additional $4,000 in your home purchase. Okay, so if you get a raise and let's say you change jobs, let's say, and you get an additional $10,000 per year in salary, then you'll be able to afford an additional $40,000 in your home. So that's the impact that income has. Again, using that 3% rate as the basis, that's the impact that income has on your buying power. The next thing is your taxes. That's huge. People often don't really consider that when they're shopping for a home. Taxes have a huge impact on your buying power. So for every $1,000 in taxes, that's going to impact your buying power by $20,000. Okay, so think about that. There are some towns that have expensive taxes. Sometimes you're buying a newer home where the taxes are more expensive, and just changing from one neighborhood to the next or one town to the next could significantly impact your buying power. So like I said, for every $1,000 in taxes, that lowers your buying power by $20,000 on the home purchase. So the next thing is that's similar to taxes, but has a little bit of a different impact is homeowners association fees. So some people prefer to buy a condo instead of a single-family residence. If you have HOA fees, and even, I shouldn't say that because single-family residence is also, if you're in a community, they might have HOA fees too. But for every $100 of HOA fees you have, that reduces your home buying power by $25,000. That's kind of huge. And the same thing goes for, I mean, by the way, that's why I personally prefer not to have HOA fees. I say to myself, I don't want the maintenance, but at the same time, I could probably pay someone to take care of my lawn, or if I have a pool, that, you know, for less than what the HOA fees are. Anyway, that's a whole other video. Lowering your debt. So for every $100 of debt you have, and I mean debt that shows up on your credit report, for every $100 of debt that you have, that also reduces your buying power by about $25,000. So think about if you have a $400 car payment, that'd be an expensive car. $400 car payment, that reduces your buying power significantly. And again, that's just rough math using the 3% as the basis. So, you know, hopefully this gives you some clues as to how you could make some changes in either in your home search or in your home finances to be able to afford a larger home. Getting rid of a high payment on your credit report is big. So you could have like I said, the car payment's the big one usually. Student loans are really tough. Those are harder to just knock out. But anything you can do to remove as much of your monthly debt obligations would help you to qualify for that larger home. The taxes are a huge thing, like I mentioned. And when I first started off the video talking about interest rates, you know, your credit score is one of the major factors that impacts your interest rate. And oftentimes people don't realize it until it's kind of too late, and they're ready to lock in their loan and shop for the home. So if you're watching this now and you're not close to shopping for a home, or even if you are, just when this is over, just get right on how to improve your credit. And I have a few videos that talk to that. You can binge watch those. That'd be great. And if you have any questions about how to qualify for a more expensive home, just leave the comments down below. I'll answer them quickly. If you enjoyed this video and found it helpful, hit that subscribe button and bell notification icon, and I'll see you next time.